All right, good morning, members. Let's talk about the various trades that we're watching the Cradle to Grave series. One of them I closed this morning. The other two are just running like gangbusters, doing exactly what we wanted. We've taken some partial profits, as you know, but I want to cover where things are. I'm starting with VRX here. Now, VRX has been slowly working its way back up to the spike high. Now, this spike high had some volume on it, and it's it's hanging up here, but it's under a little bit of pressure. What we want to do is we want to look at the next place to buy. We've sold out a good portion of it, took profits. Now we're going to look and see, if it can spike this and fail, we'll sell the rest, but it hasn't gotten there. That top was 38.18. The highest it got was 37.90. We're trying to pull back, trying to close this little gap area here now. As you know, our long-term objective is a trade all the way back to this 53.90 area. So, long term, this is a good trade. We just have to keep trading it. Where's the next levels? 33, 32, 31, all the way back down into this swing point lows high, 31.59, right into that area. So we'll just have to measure it comes back, see how it trades, and as you know, mostly I'm going inside, looking at inside bars on this. And so I suspect that what we're going to do is we're going to find a setup somewhere in there and we'll add some more back as a result. Let's go to the next one, which is KMI. This, of course, is oil pipelines. We've traded this reasonably well, not great, but reasonably well. Made some good profits on it. Let's talk about what it's doing. This is the trade I closed this morning, as you know, and I want to show you why and what I'm thinking here. So we've got this large kind of a range trade that's taking place, right? You've got a lot of swing point lows lined up down here at the bottoms and at the tops. And as this range trades, when it breaks one side or the other is going to be the next trade. We're right in the middle of it. We've actually, we've bought prior to all of this and made some good money on the way up, and we've traded it a couple times, 2 or 3 times now. It's just not worth the risk at this point. Oil has made its run. West Texas Intermediate is at a level where it looks like it could potentially fail. And so when I look at all that in perspective of this, it's just time to take the money. That's what we did. Now we're going to watch for a breakdown over here or a breakout up there and make the next trade on it if we come back to it. So that's where that is. Now the ones that are just going gangbusters, of course, are gold and the gold stocks. So let's talk about gold first. One of the things I had talked about with gold, I'm going to pull over the weekly chart, is that when we had made this huge run up, right, we made that first angle and then we spiked straight up, right? That spike straight up, right, left volume on the charts, and that set up the range that you see here, right? There's that spike bar there. That set up the range, and back then I was talking about that this would probably set up a range and that we would trade that range. And I'm drawing in all 3 potential ranges here. So the first range was this, but then it immediately spiked down and we knew the range was larger. So once we saw that, then it was like, okay, that's fine, we'll deal with that range, right? So that's the range we're going to deal with. If the larger range comes into effect, then we'll deal with it. So once we saw that, right, then the question was, can we buy these retraces, which is what we did, and can we sell the spikes, right, into the highs? And that's what we also did. And we sold some yesterday not knowing if this would hold or not. Well, it did. And not only did it hold, it broke out. Now you've broken this swing point, that swing point, this swing point. So you've got multiple swing point breaks on this time frame. You've also now, if it holds today, which it looks like it will, it's going to have a break of this swing point high as well. That's going to be multiple swing point breaks on multiple time frames. And what does that do? That sets up an even larger move potentially. So an ABCD structure that take us off the chart here in terms of the move. So at this point, if it holds the breakout, which it looks like it does, we're not going to sell anymore. We're going to hold on to what we have, and we're going to look to buy any sort of retrace back into the swing point high. And so what we're doing is we're saying, hey, every time we sold this on these spikes, we were saying, eventually this is going to break to the top side. We're going to try to build our position, and we built it larger. And then if it breaks out and we've sold some, which in this case we did, right? We're trying to put ourselves in a win-win situation. In other words, we sell these spikes, right, as it comes back to this level. And if it does break out, which it has now, any kind of retrace we buy, we get in fairly close to where we sold out, and we expect more upside. So that's the way that one looks. And then GDX essentially is the same story, although it's been even stronger. It has broken out to an extended. This, if you look at it on a daily time frame and now the weekly time frame, you can see the extension extremely strong. And I didn't show this on the gold chart, but we can see it here. These are going after these swing point highs up in this area. This was the first breakdown bar. It's about 26.20. We're not that far away from it. I think that's the target. So that's the three trades that are still on tap. The KMI we've exited at this point. And what we're going to do is, we have other things in the portfolio, as you know. We've added silver, we've added other things. As a matter of fact, if we look at it, silver itself has broken out as well and has finally made its turn. So this is where the trades are going to be for a while still. That's it for today. Thanks for joining me, and I'll talk to you next time. Bye.